Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is September 11th, 2025, and we're diving into Kroger's recently released second quarter earnings report. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Kroger's performance, especially given the significant developments in their latest report.
Revenue and profitability overview. Let's start with the top line. Kroger reported total sales of $33.9 billion for the second quarter, which is flat compared to last year. However, there are some interesting dynamics at play. John, can you elaborate on this?
Absolutely. While the total sales remain steady, it's important to note that identical sales without fuel increased by 3.4%. This indicates strong underlying growth, particularly in their e-commerce segment, which saw a 16% increase. Additionally, the operating profit rose to $863 million, and the gross margin improved to 22.5%, driven by lower supply chain costs and the sale of Kroger Specialty Pharmacy.
Operational efficiencies and future outlook. Moving on to operational efficiencies, Kroger reported an adjusted FIFO operating profit of $1,091 million and an adjusted EPS of 104 cents. How does this reflect on their operational strategy?
Kroger's focus on operational efficiencies is clearly paying off. The adjusted FIFO operating profit shows a significant improvement, and the adjusted EPS of $1.04 is a testament to their effective cost management and strategic initiatives. Looking ahead, Kroger has updated its full-year guidance, raising the lower end of their EPS forecast to 470s, 480s, and they expect to continue increasing their dividend, which is a positive signal for investors.
Capital allocation and shareholder returns. John, let's talk about Kroger's capital allocation strategy. They've been quite active with their share repurchase program. Can you give us more details?
Indeed, Kroger has been aggressive in returning value to shareholders. They initiated a $5 billion accelerated share repurchase program, which is part of their $7 billion authorization. Their net debt to adjusted EBITDA ratio stands at 1.63, which is within a comfortable range, allowing them to invest in growth while maintaining shareholder returns. Additionally, their capital expenditures are projected between $3.6 and $3.8 billion, with free cash flow expected to be $2.8 to $3.0 billion, supporting their strategic investments and shareholder returns.
CFO Insights. Finally, let's hear from Kroger's leadership. What insights did CEO Ron Sargent and CFO David Kennerly share in the report?
CEO Ron Sargent emphasized the strong results and progress on their priorities, such as simplifying the organization and enhancing customer experience. CFO David Kennerly highlighted the momentum in their business, particularly in pharmacy, e-commerce, and fresh categories. As a result, they've raised their guidance for identical sales without fuel to a range of 2.7% to 3.4%, reflecting their confidence in continued growth.